Let's get to the CME Group in Chicago, the Santelli Exchange. Hey, Rick.
Good morning, Carl. I'd like to welcome the Evenflow macro managing partner and founder, Marc Sumerlin. Marc, thanks for joining me today. Let's get right into it.
Okay.
If we look at what's going on with regard to the markets, many believe that one of the big issues keeping stocks moving higher and Kevlar coated with respect to any big corrections is the recent spat of non-QE, which of course is QE, with all the Fed buying of mostly short maturities, which of course was followed by rate cuts and a much higher bar to raise rates due to inflation. Your thoughts?
Yeah, well, absolutely. I mean, so I think the Fed is one of three things, and so it gets its share of the credit, but it's not the whole thing. Whether the Fed likes it or not, M1 growth tracks the stock market. Sometimes one leads the other, sometimes the other one leads. But the Fed going into mini QE is a positive force in the right direction. When we think about the market relative to September, we've also gotten a trade piece, and we've gotten a decreased probability of Elizabeth Warren or an outlier candidate. And those three things go into the stock market. And then the fourth thing that is really important is we took a whole foreign policy risk off the table with Iran, where we tested early on in the year what their threshold was and how far they were willing to push the war, and we know that they blinked. And that also helps the stock market.
Now, you know, when you look under all of the issues you just brought up, under the microscope of politics, because everything is so political as we get close to the election, a lot of those become negatives, whether it's foreign policy, even the trade deal. We just had many discussions where the trade deal isn't that great of a deal. Listen, all I know is I can't believe the U.S. is any worse off. And in the final analysis, maybe one of the big issues that gets lost here is how well stocks are positioned as we now move into a better potential capital spending chapter globally. Your final thoughts?
Yeah, no, absolutely. I mean, I think the trade deal, we bought ourselves peace for 10 months. We put enormous pressure on China. They are going to act better. We're going to get some gains out of it on stopping technology theft and other things that take a while to get in. And the capital cycle is set to improve. I think the economy is at full employment, and it's pretty stable, and that's a good place to be right now.
I got you. Marc Sumerlin, thank you for joining me today. David Faber, back to you.